your search is over because you just found the best trading strategy for indices at the moment, right? So I'm going to share with you this quick strategy that will make you very profitable, and I promise you that. So stick with me till the end, and I'll show you exactly how you do it, right? So for those who've been following me for quite a while, I think you recognize what this strategy, but there are some differences between the boom and crash strategy. How we trade the boom and crash and indices using this strategy. So now I'm going to show you the secret sauce to this one, to making you profitable, right? So before going further, if you like this video, if you like going that I'm sharing with you, hit the subscribe button and turn on the notification bell. Hit the like button too, right? So let's get into it, right? So I'm gonna show you how to set up what these indicators first, then I'll jump into the rules that you're gonna have to follow in order to use this strategy, and what time frame that the time frame that we're going to be using, and all those other things that we're gonna use, right? So firstly, on the moving main chart, I've got two moving averages, right? On the indicator window, I got three indicators, two moving averages also, right? So let me show you the main chart. So on the main chart, we're going to put the first moving average is period 50, shift 0, method exponential, apply to close, right? Then for the star, I chose 1 pixel and the color black. So the black moving average that I'm going to see on my chart is what is my 50 moving average, right? So, and 1 pixel, I choose 1 pixel because the I don't want the EMA to cover my chart, so that I want to see my candlesticks clearly. Right? So that's why I use the thin lines. But if you are used to if you are used to having thick lines on your chart, you can use 2 pixels, right? Then click done. Then for the second moving average, you're going to be using period 200, shift 0, method exponential, apply to close. Then that's the purple one on my main chart, right? Choose any color of your choice, right? Then click done, right? So after doing that, we're going to add what the RSI, relative strength index, right? So the relative strength index, we're going to use the period of 21, apply to close. Then style, you can choose 2 pixel, 1 pixel, any pixel, but you're going to have to use the color of your background right here. So make sure if your background is white, use white. If your background is black, use black, or any other color that you're going to go. That is your background, right? Then take note of the levels that I'm going to share with you, right? If you can take a screenshot to refer to them later, you can take a screenshot, right? So for the levels, we're going to add levels 40, 50, and 60, right? For the level 40, we're going to add the description still buy, right? 50, we don't put any description, right? But we're going to be using that level, right? Then for 60, it's still a sell, right? Then 2 pixels, and we're going to be adding black right here. So I want to see what these levels on our chart. That's why I'm using black, right? Click done, right? After clicking done, then you add the first moving average, right? First moving average is going to be, so the first moving average is going to be period 2, shift 0, method simple, right? Take note of the method and the apply to right here, right? Those are the most important things that you have to take note of, right? So method is simple, right? On the main chart we're using exponential, but yeah, make sure you use simple, right? And apply to close. Apply to first indicator data, right? So take a screenshot, right? So that's the green one, the green line on my indicator window, right? Click done. Then for the second, sorry, for the second moving average, we're going to be adding period is going to be 7. Method simple. Apply to first indicator data, just as the previous one, as the previous moving average. Then color, that's the red one on my chart. You can use any color of your choice. Then click done. After setting up your indicators, it should look something like this, right? After setting up all your after setting up all your indicators, right? So the time frame that we're going to be using, I'm going to be using the 5-minute time frame. So I like to use the strategy on the 5-minute and the 15-minute time frame when I'm trading indices, right? But I don't encourage you to use it on the 1-minute time frame because it changes quite quickly, right? So the 5-minute and the 15-minute time frame are the best strategy. They are the best time frames that we're going to be using. That's where you see the most positive results, right? The most the results that we want, right? So let me jump into the rules. So okay, so for the strategy we're going to be using, the first confirmation that we're going to be using is the 5200 cross, right? After we've got the 5200 cross over there, right, we look for sales. So if the 5200 crosses for a buy, right, we enter our buys, right. We are only going to be looking for buys. So if it crosses for a sale, we're going to be looking for sales only, right. So that's the first thing that we have to take note of, right. So after that, we check our indicator window right here in the bottom, right, our indicator window, right. That's what we check next, right. So if you saw my previous videos, right, if you want to understand this better, you can check out my previous video about the boom and crash that I posted, right. So but I'm just going to explain it in a quick, right. So right here we're going to be using when the so let me look for a trade example, right. So right there, right. So firstly we've got our 5200 cross, right. So we're going to be looking for our sales, right. After we're looking for our sales, right, wait for the 50 for the candlesticks, right, for the market to pull back to the 50 moving average, or to pull back to the 200 moving average, right. So after it pulls back to those levels, we then check for our indicator window. If it's at level 50 or at level 60, right, we enter our sales, right. So that's why the description of still sell, right. So 60 we still enter our sales, right. And if it crosses on the level 50, we enter a sale again, right. And if it is for buys, right, we'll be entering at the level 40 and level 50 again. So level 50 acts as a support and resistance for both buys and sales, right. But the 40 and the 60 are just for different purposes, right. So right here we've got one. Then for okay, so right here we've got one. A pullback to the 200 moving average, right. Then we've got one. The small M that I was talking about in the previous video, right. It forms an it pulls back to the 50, to the 200 moving averages. Most of the time it forms what? A small M, right. That's what I was saying, right. But you have to enter on the first leg, right. And because what, we don't know if the market is just going to give us one leg and continue, right. So we end on the first leg, right. The second leg is just for what, for confirmation, right. Or we can add what, positions when it breaks what, the neckline right there, break like the neckline, like, sorry. So we got a small M, right. So we can end on the first leg, right. Then when it comes back for the second leg, right, we add positions what, when it breaks what, the neckline over there, right. We add what, our positions, right. So as I was saying, when it pulls back to the level what, to the 60, when the RSI, when the green line pulls back to the level 60, right, we start looking for sales when this one, when these moving averages cross the red and the green. When they cross forward for a sale, we start looking for sale opportunities, right. So right here it crossed over there, right. I'm only considering one second leg over here, right. It crossed forward for a sale, right. But as you all know, the indices tend to range more than the boom and crash. The boom and crash can just form a peak like that, right? Like that, right? So the only difference between these strategies is on the indices we are going to be using order blocks again, right? So we're going to be adding what, another confirmation, right? For our order blocks. And if you haven't seen my video on the where I talk about order blocks, you can check it in the description. I will think I'll leave a link in the description, right? So right here, our stop loss we're going to be using one. We're going to be checking one for order blocks, right? So as of here, I can see what, I can see this order block right there, right? Yes. So this order block right here, right? Starting here, right? On this green one, and because it was the green candle that broke what, market structure. So stop loss going to put it right over above this level here, above this green candle here. And if you don't understand order blocks, I will leave a link in the description and you can check it in the bit later, right? So that's what the only difference, that our stop loss is going to be a little bit high, right? We're going to be using order blocks for our stop loss, right? So as you can see right here, right, 5200 crosses for looking for, we're looking for sales, right? After we're looking for sales, wait for a pullback to the 50 moving average or the 200 moving average, right? We've got a pullback to the 50 moving average, right? After that, we've got one, We wait for a cross on the indicator window, the cross over there, right? And then for our stop loss, we're going to be placing it above this one, this order block right here, right? So our order block is going to be looking something like that. It's going to be somewhere over here, something like this, right? So we place our stop loss above this order block, right? After placing our stop loss above the order block right there, we hold our trade, and as you can see, it went straight into profit. So that's just what we are going to be doing, right? You can repeat this video quite a few times if you don't understand what I'm saying, right? If you haven't got the hang of it yet, right? So right here, we've got what? Sorry, got a pullback to the 200 moving average right there, right? Forms this M that I was talking about, right? After forming an M, right, you've got a cross of the 5200 cross below the level 1, below the level 60. So we're still looking for our sales, right? After crossing like that, we wait for, we place our stop loss, we enter, right? Then we place our stop loss above the order block, right? So as you can see, that's our order block right there. Sorry, let me use this object right over there, right? So we got this order block right there, right? The last green candle over there. That's what our order block. So as you can see, our stop loss wasn't hit, and we went straight into profit. I think it was about, yeah, $7 or so, right? So this is the best scalping strategy you can get, right? Not like those 2 minute strategies that they lie to you, right? So you can check, you can backtest this, try it out on demo, then go live once you see profit, once you see that it works for you. And if it doesn't, I'm sorry, you can just look for another video on our channel, right? We've got many strategies, and I share the best strategies that I get with you guys, right? So if you like this content, like, subscribe, and share the content, right? So hit the notification bell, and thank you for liking this video.